Hi, welcome everyone to Views from the Bridge. I'm John Fisher, President of Bridgeport Asset Management. Bridgeport manages both publicly traded and private asset portfolios for a wide range of investors and their advisors. I want to welcome today Pierre-Antoine de Selancy, who is co-founder and managing partner of 17Capital. Bridgeport is an investor in two of 17Capital strategies through our Bridgeport Alternative Income Fund and Bridgeport Private Equity Opportunities Fund, both of which provide investors with diversified global institutional caliber exposure to private credit and private equity, respectively. Our alternative income and private equity funds are each currently invested in over 20 individual strategies in partnership with top-tier global private asset managers like 17Capital, providing exposure to thousands of individual assets. The purpose of today's chat is to spotlight 17Capital's investment strategies within Bridgeport's funds and hopefully help everyone gain a better understanding of what NAV finance and structured private equity are all about. Pierre-Antoine, welcome again, and thanks for speaking with us today. Maybe just talk a bit about how you get repaid on the $300 million, how that cash flow waterfall works with the underlying 14 companies as kind of security there.
Sure. Maybe just me to set the scene for for the people who are gonna watch this. We started in 2008, and we're now investing of fund number 5 on the private equity side, which is $2.9 billion. We're investing our first credit fund, which is 2.6 billion euros. We've done 89 investments and 44 exits.
Right.
So in terms of exits, the vast majority of them happen when, out of these, if I come back to the example of this fund with 14 companies, they sell them, we are repaid on each exit. And then when they come closer to having 8 or 9 companies, we take 100% of all the cash.
Okay.
We don't want to be in a portfolio with less than 6 companies on our credit strategies. So we say, okay, if you get to 8 or 9 companies, we're going to take everything so we can be out faster.
Right.
We are repaid when they sell companies. And out of these 44 exits we had, we've got 15% IRR on average across these 44 exits. I think in probably 4 or 5 cases, we had to turn around to the manager and tell them, we need to sit down. We get into the end of our fund and we agree on an exit and you buy us out.
Right.
And we've never lost money ever.
Right. On a single deal, you've not lost money since you started.
Never.
Yeah, which is great.
Never.
Yeah. That's a lot of ups and downs and different market conditions, different macroeconomic conditions that have occurred over the last almost 15 years here.